But I mean, I don't think silver is going to stop at 100. I think that you could see by the end of the year $200 silver, and you know, gold could be getting close to 10,000. Well, again, it could drop by 50% against gold. It may not drop by 50% against the euro. But I think if we get a break in the dollar, if the dollar index, which is right now, 98, 99, if we break down to about 70 by the end of the year, yeah, we can easily see gold. I don't know if gold will hit 10,000 this year. It may not, it may take till next year, but I mean, it's going there. But silver, silver could hit 200 before gold hits 10,000. It's at
Point.
89 right now. I mean, we're only $11 away from 100. I mean, we were $11 lower a week ago. I mean, you could have bought silver. It pulled back to like 70, 71, you know, less than 2 weeks ago, and now it's, 89. People, obviously, if you want to get some physical gold and silver, especially silver, I've been telling people, we haven't run out, but we're having difficulty sourcing the product right now in silver. So I can tell you that the spreads are going to start to widen. So buy what you can while it's available, your silver coins and bars at shiftgold.com. Well, we're basically back to QE. I mean, the Fed announced that. They just didn't call it QE. They said we have to manage our balance sheet. And so they're buying treasuries. And now you have Donald Trump ordered Fannie and Freddie to start buying mortgages. So we're getting it, right? The Fed is buying treasuries, the GSEs are buying mortgages. This is just the beginning, and they're going to be cranking it up as there's more pressure to do it. There's some pretty dirty shirts in the fiat currency hamper. But when they use that analogy of the dollar being the cleanest shirt in the hamper, it was to say that there was no alternative. That look, the world is stuck with the dollar because everything else is worse, right? And I always pointed out, no, gold is an alternative, and gold is not in the hamper at all. And so people that were thinking that the dollar's reign as the reserve currency was safe because no other currencies were good enough to take its place. My point was we don't need another currency. We need real money. We need gold to replace the dollar. And that is exactly what is happening.
Peter Schiff predicts silver hitting $200 and gold approaching $10,000 by the end of 2026 as dollar debasement accelerates. The Fed is back to QE without calling it that, buying treasuries while Fannie and Freddie buy mortgages. Trump wants control of the FOMC to force more inflation creation. Foreign central banks are dumping dollars for gold while the public piles into silver.
Gold and silver are getting ahead of that. They're forward looking. The dollar is going to be debased. They're going to print a lot of money, and that money is going to lose most of its value. And the foreign central banks obviously were able to see this, and they started accumulating a lot of gold a couple of years ago, and they're continuing to buy. The public is now waking up. They're buying silver. So, you're going to see more and more money fleeing the fiat dollar-based system into real money. I know it's supposed to be there, but is it actually there? When Trump was first came into office, there was a lot of noise about let's audit Fort Knox. Let's see how much gold we have. Well, they haven't talked about that in many, many months. They kind of put the kibosh on that. And maybe it's because they found out somehow that it ain't there.
I was going to say, why do you think it's gone so quiet? Do you think that could be the case? But it just
Yeah,
isn't
look,
there?
I think that obviously there's a risk that the gold is not all there. Maybe it's been leased out, or I don't know, or it's been sold. But they don't talk about it anymore. So why else would they have shut up about it?
Yeah, because they were pretty gung ho about doing it. It was almost like the bros are going in to sort it out, and it never happened. So it went quiet.
I think they realized that there's no upside because everybody assumes the gold is there. So if it is there, well, that's what everybody thinks. But if it's not there, that's a big problem. And so why, risk letting that cat out of the bag, right?
Physical silver is becoming difficult to source with widening spreads. The 2026 precious metals breakout is happening now across gold, silver, platinum, and mining stocks. The dollar's 50% collapse against gold is inevitable as fiscal crisis deepens.
The money's not going into Bitcoin. So it looks like that bubble has gotten a bunch of holes in it now. And I think the Bitcoin is digital gold false narrative is going to be deflating.
Yeah, I read someone commented a little while ago that it's digitalized energy Bitcoin, which I just don't think makes any sense. You
Well,
got
it's not digitalized energy because you can't use it to power anything. It's not like it's a battery. It's, I mean, people get confused. You consume energy to solve the mathematical equation that generates Bitcoin. But just because you use up energy to create Bitcoin doesn't mean that the Bitcoin somehow represents that energy. No, the energy is gone. You can't get it back. Ironically, they're going after him not for the building. It's for lying to Congress about the renovation. So it's basically, for lying, which, I mean, they all lie. Everybody in Congress lies. The president lies. In fact, when the president was asked about this investigation of Powell, he said he didn't know anything about it, which of course was a lie. There's no way that he doesn't know about this investigation. In fact, there's no way that he's not the one behind it. Um, so it's ridiculous to say we're going to, charge Powell for lying. I mean, all these guys do is lie, and they lie about much more important things than the elevators in their building and how much they spent on them, or whatever, the executive bathroom. Um, so yes, Powell is correct. It's all a pretense, just like with Lisa Cook. It wasn't about mortgage fraud. It was about getting rid of her. Not that she was this, huge hawk, but Trump just wants to make sure that his flunkies are in control of the Federal Open Market Committee. He wants to basically pack the FOMC the way Roosevelt wanted to pack the Supreme Court. He wants the Fed to be far more aggressive in creating inflation than they would be, if left to, on their own. I mean, obviously, we're not in the infancy here. We've had a big move up. I think we've kind of just recently broken out. I think last year was kind of really the breakout for the mining stocks and silver, and 2024 was the breakout for gold. So this new leg of this bull market, which has been ongoing. I mean, gold's been in a bull market since 1999, and it was under 300. But it consolidated from 2011 to 2024. So that was a long period to consolidate and form a base. So gold broke out in 2024, the miners broke out, and the silver broke out in 2025. So this is really the first year, 2026, where we have everything already broke out. We have the breakout in the precious metals, not just gold, but all the precious metals. Because platinum didn't do that until this year, also, right? It was a gold story in 2024, only gold, and it broadened out to the rest of the precious metals in 2025, and the mining stocks finally started to move. So I think this is the first year of what's going to be a big precious metals bull market. It's not the ground floor, uh, you know, but it's close enough compared to where we're going to end up, at the end of this thing. That's why our gold fund is a great buy right now. EPGIX is the no load symbol. We have a lot of juniors. We built these positions up over the years, and it'd be hard to accumulate those positions now in the kind of size that we got. So yeah, I think we have a lot of potential. I think a lot of those companies are going to get bought out. I think there's going to be a big consolidation in the industry, and the bigger companies are going to look to expand their reserves. Um, and the cheapest way to do that, the quickest way to do that, is to go to these smaller companies and buy them up, because a lot of the smaller companies don't even have the cash to develop their resources. But the big companies are going to be swimming in cash because they have substantial existing mining operations. I don't know why they would decide that. I mean, I'm obviously I can't say that it's completely impossible, but I don't think it's very probable. And I don't know why, because our fiscal situation is only going to get worse. It's not going to get better. And with every passing day, it gets worse automatically. The size of our debt grows, the cost of servicing it grows. So if you're worried about the dollar today, you're going to be even more worried about it tomorrow. So I don't know why the trend would reverse. If anything, it will accelerate as more people who aren't currently worried start to worry, you know, and the people who have been worried, worry more. So that's the direction that I think we're headed in. We're still recommending that people buy. I mean, even though these stocks have gone up a lot in relation to how much gold and silver have gone up, they haven't gone up nearly enough. And I think that's just a function of a lack of confidence in it by investors in, the longevity of this bull market. I think there's a lot more fear than greed in the market, uh, you know, which is very healthy, early in a bull market. And it just means there's plenty of opportunities for people to buy these stocks. Yes, you're buying stocks that have doubled or tripled, but in many cases, they're actually cheaper than they were before they doubled or tripled. If you look at them based on their earnings and their future earnings. Most of what the Fed is doing now, right, is in the short end. They're buying treasuries. They're trying to keep the short end down, and that's where the government is issuing uh, the vast majority of its new debt. So, we've got like a $3 trillion national, budget deficit now, and that's being financed with short-term money. They're not going and selling 30-year bonds or even 10-year bonds. They're out there in the short-term market, trying to finance, these obligations, which is obviously going to blow up at some point. Because if the Fed is forced to jack up short-term interest rates, like Volcker did, where they went to 20%, imagine if they just went to 10%, half of where they went, under Volcker, even though they should go even higher than they did back then. We're in much worse fiscal shape now, and we have a much bigger inflation problem. So if rates went to 20% in 1980, God knows how high they'd have to go now. But the problem is we could afford 20% in 1980. We can't afford half of that now. I mean, not even close to half of that. Trump is basically using the Fed as the scapegoat. And if the Supreme Court strikes down his tariffs, which they should, he'll use the Supreme Court as a scapegoat, because the economy is actually weak. Even though he goes around the country telling everybody how hot it is, it's actually pretty cool, and it's going to get a lot colder. And he needs somebody to blame, and so the Fed is a perfect scapegoat for that, and Powell is the face of it. So a lot of it is just to try to show, look, he's a bad guy. We got to get rid of him. He's hurting the economy, and if things go wrong, we could just blame it on Powell. I don't really believe the growth numbers. I think we understate our inflation rate. So I think that the actual real growth is lower. But a lot of that too is being driven by this over investment in AI, and then you have the consumer that has really dipped into what's left of their shallow savings pool. So we've had a collapse in the savings rate, and so we've had a lot of excess spending. And of course, the government, we have massive deficit spending. So this is not real economic growth. I think this is just, a precursor to a big recession. We're just bringing forward a lot of spending and consumption out of the future into the present.